Coming up on the program, Africa Development Bank President Akiwumi Adesina proposes the use of IMF resources to buy out holders of African bonds. And Sudan clears final hurdle for debt relief at Paris conference. IMF calls for major reforms to turn Zimbabwe's economy around. Hello, welcome to Business Incorporated. I'm Ladi Williams. Let's begin with market numbers starting in Africa. It was mostly positive sentiment at intraday amongst the markets we track here, but for Nigeria, all other were in the green. Nigeria's main index declined 0.02%. The GSE index in South Africa rose 0.45%. Elsewhere, EGX30 in Egypt gained 0.83%, and Kenya ended Monday's session negative at 0.80%. Similarly, in the Gulf region, investor sentiments were on the green at intraday. In the UAE, the Abu Dhabi index rose almost 0.78%, while Dubai's index jumped 1.19%. Elsewhere in the region, Saudi Arabia's index rose 0.47%, while the Qatari index was up by 0.14%. And European stocks advance in the morning as global markets look to break out from the gloomy sentiment seen at the start of the trading week. Meanwhile, Eurozone gross domestic product declined by 0.6% in the first quarter, in line with initial estimates. Let's hear more now from Conrad. Great to have you, Conrad. The Eurostat data has confirmed that the 19-member bloc entered a technical recession to start the year, but is there still any light at the end of the tunnel?
Good afternoon, Ladi. Yes, there is some light at the end of the tunnel. You know, you said that the GDP of the Eurozone, gross domestic product, our economic performance during the first quarter was down 0.6%. That's the comparison to the previous quarter, the fourth quarter of 2020, of last year. If you make the comparison to the first quarter of 2020, the same period of last year, then the contraction is minus 1.8%. Now, this means, as you said, that that we have technically reached a recession. The market reaction is pretty cool, I would say. If you take the euro-dollar exchange rate, it's even slightly higher today. And traders explained that this has mainly two reasons. Reason number one is that this recession is mainly due to a slow start of the vaccination programs here in Germany, but also in other Euro countries. Now, with a pickup of vaccinations happening right now, of course, the scenario that we can hope for a stronger performance of the economy in the coming months remains intact. Reason number two for this relatively strong euro has to do with American monetary policies. In recent days, a number of Federal Reserve officials in the United States have said that they think that the current spike in inflation in the US is probably temporary, which means that markets don't have to get too nervous about potential tapering of quantitative easing or about potentially rising interest rates in the United States. This is something that's weakening the US dollar, and it's given our currency, the euro, some support.
All right, but markets in Europe have shrugged off concerns about inflation as company shares are in demand again. The German index DAX even has reached a new record high this Tuesday. What's behind this?
Well, the reason behind this is basically the same reason that I gave a couple of seconds ago. It is hope of investors for the coming months. They're not so much looking back at the first quarter of this year, our contracted economy, the recession in the Eurozone, but they're looking ahead. As more and more people in Germany and in all of the other Eurozone countries get the second shot of a vaccination, the moment of a reopening of our economy, of reopening of restaurants and retailers also comes closer and closer. And you know, if we look at the German share index DAX, and the biggest gainers among DAX shares today, all of them are cyclical shares. Siemens Energy, for example, Covestro, the plastic materials maker, the automakers, Daimler and Volkswagen. So this reflects quite clearly that markets are hoping for a global economic recovery, including Germany and the Eurozone. Of course, I also have to add, look at this. After the record high this morning, investors have become a bit more cautious again. So, of course, the DAX has reached a record high today, but it's a bit weak.
All right, true. That's true about cyclical stocks. They are doing well at this time. But a day after AT&T announced the merger of its Warner Media business with Discovery, several other big media deals are about to happen. Can you tell us more about what's going on there?
Yes, you know, this consolidation of the media sector continues, and so does the run for content. This merger of AT&T's Warner Media business with Discovery was, of course, driven by the ever-growing competition of streaming services. Now, this Tuesday, it's reported that Amazon is in talks to take over the MGM studios, the famous studios of the James Bond movies, for an estimated amount of $9 billion. This, too, of course, is driven by Amazon's constant need to provide new content to the users of its streaming service. Here in Europe, in France, we have two large television stations which are merging, TF1 and M6. And of course, this too has to do with the growing competition. The traditional business of television, you know, selling advertisement, has become more and more difficult in recent years due to the competition of the internet and of streaming services like Netflix, Amazon, or Disney+.
All right, Conrad, I guess we'll leave it there. Thank you so much for the update and enjoy the rest of your day. And in the UK, the job data continues to make headlines. The UK unemployment rate in January-March fell to 4.8%, down from 4.9% a month ago and 0.3 percentage points lower than the previous quarter. Let's see how the markets are digesting the numbers now with Juliana. Great to have you, Juliana. Well, falling unemployment rate is a welcome news, no doubt, but economic activity among young people has hit a record high with fewer 16 to 24-year-olds in work looking for a job. This should also be a concern for the authorities.
Yeah, good afternoon, Laddie. It is a concern, well, it should be a concern that young people are facing the brunt of job losses here in the UK. I believe during the time of the pandemic, about 770,000 people lost their jobs. And even though the economic labour market data we received today is positive, it still confirms that there are over 4 million people in furloughed positions. Unfortunately, because it is retail and it is hospitality that has bared the brunt of the job losses, a lot of people that are working in that sector are school leavers, college leavers, university leavers, and many of them have lost their jobs. Last year, the Chancellor Rishi Sunak did announce the launch of the Kickstart scheme. I believe that cost over £1 billion. It's part of the Job Centre and Universal Credit, whereas you're giving this age group 16 to 24 some money while they're not working, but then you're also providing them with apprenticeships and training to keep them in jobs. Now, the Chancellor has always responded to allegations of him leaving out the young people, that the Kickstart scheme is doing well, but there have been criticisms. And again, this new data released by the Office for National Statistics still does show that the vast majority of people that are looking for work are 16 to 24-year-olds. It is May. This is the time where a lot of people in college and university have finished their exams. They are going to be looking for work, but there is a silver lining. The data today also does show that the number of vacancies that are being advertised are up. Of course, on Monday was the start of indoor dining. Lots of hospitality bosses are looking for workers, but still, yes, young people are far worse off than anyone else.
Well, young people need to find work to keep them, engaged. But how are the markets reading this data this intraday?
Well, the FTSE is in good position at intraday. It was in positive territory as it started, and it maintains that way at intraday. There seems to be optimism today that we could finally be heading into recovery, although we have to wait and see what those inflation figures say tomorrow. The all share is up 0.40%. The FTSE 100 is up by 0.39%, and the FTSE 250 is up by 0.49%. In the currencies market, the British pound is up on the US dollar by 0.40%, down on the euro by 0.10%, and up on the Japanese yen by 0.16%.
All right, Deliveroo back in the news again, loses the unfair dismissal case after rider sacked for being too slow is ruled an employee. How do you see this decision impacting the wider gig economy?
Well, it could. We are starting to see pockets of these cases fling up across the world. This one involves a Brazilian Australian Deliveroo rider who I believe was terminated from his position at Deliveroo because of the algorithm and the analytics that showed Deliveroo bosses that he was too slow during the pandemic in getting food to people's doorsteps. He's gone to a tribunal, and a judge has ruled that it was unfair dismissal, and because of the hours that he was working and what he was doing, he is indeed a worker and he should be treated that way. It is likely to have long-lasting ramifications for the gig economy. One of the reasons why Deliveroo's long-awaited IPO flopped a couple of months ago on the London Stock Exchange was because a lot of investors are now starting to worry about the governance of the gig economy, especially during the pandemic, where so many of us, well, millions of people around the world relied on these last-mile delivery drivers or these gig economy riders, and they were working exceptionally hard, so they do deserve their just desserts, and that's what's happened in Australia. And I believe that this driver is going to be getting a large settlement.
Yeah, I feel like the gig economy is going to get a lot of changes going forward. Anyway, Juliana, thank you so much for the update. Enjoy the rest of your day.
Thank you.
All right, so shares in Asia Pacific mostly jumped today. In Japan, the Nikkei 225 saw robust gains as it jumped 2.09%, while the Topix index advanced 1.54%. Over in Hong Kong, the Hang Seng index rose 1.31% as of its final hour of trading, and mainland Chinese stocks closed mixed, with the Shanghai Composite gaining 0.32%, while the Shenzhen component dipped moderately. South Korea's Kospi edged 1.23% higher at the end of trading day, while the S&P ASX 200 in Australia rose 0.6%. And futures contracts tied to the major U.S. stock indexes rose in early morning trade after Wall Street kicked off the week with modest losses. Dow futures jumped 101 points, while contracts tied to the S&P 500 and the NASDAQ 100 futures both traded in positive territory. The moves in the overnight session came after lingering weakness in the technology stocks led the major indexes lower on Monday. And oil prices climbed early, extending gains from the previous day as optimism over the reopening of the U.S. and European economies outweighed fears of a slower fuel demand in Asia due to surging COVID-19 cases and a new wave of restrictions. Brent crude oil futures was up 0.3% at $69.66 a barrel, while West Texas Intermediate crude futures was up 0.3% at $66.46 a barrel, indicating that both contracts rose more than 1% on Monday. The British economy reopened on Monday, giving 65 million people a measure of freedom after a 4-month COVID lockdown. Meanwhile, with accelerating vaccination rates, France and Spain have relaxed restrictions, and Portugal and the Netherlands have opened up for travel. And gold prices extended gains early on Tuesday, hitting their highest level in more than 3.5 months, as a weaker U.S. dollar and growing inflationary pressure boosted the metal's appeal as an inflation hedge. Spot gold was up 0.1% after hitting its highest since January. Earlier in the day, while U.S. gold futures were steady at $1,868. Elsewhere, silver jumped 0.8% after hitting its highest since February earlier in the session, while other precious metals such as palladium, Platinum gained 0.4% and 0.1% each, following rising prices in the United States. Minutes of the Federal Reserve's last policy meeting due on Wednesday are expected to provide further clarity on the central bank's monetary policy outlook and policymakers' view on inflation. And after the break, AFDB president calls for the use of IMF resources to buy out holders of African bonds. We'll also bring you updates from the domestic commodities markets. That's in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated live from Channels Television HQ. So our next story now, the president of the Africa Development Bank, Nkiuma Additional, says the International Monetary Fund resources should be used to buy out holders of African bonds and avert a crisis as a global push for debt relief runs aground. Dr. Kiwumi says the common framework created by the group of 20 leading economies to get private sector creditors involved in debt workouts alongside public lenders is unlikely to be used again in its current state, as countries fear ratings downgrades if they apply. Yet, many African nations are in desperate need of debt relief as they'll struggle to meet huge repayments to investors in the coming years. To get the private sector on board, Additional is proposing buying back foreign bonds with some of the $650 billion of reserve assets known as special drawing rights that the IMF is planning to issue this year. Additional's proposal comes as leaders gather in Paris on Tuesday for a conference hosted by France on the financing of African economies. Meanwhile, Sudan has finally gotten a nod from IMF member countries to clear its arrears to the institution, removing a final hurdle to the African nation getting wider relief on external debt of at least $50 billion. Hosting a conference for Sudan in Paris, French President Emmanuel Macron also kick-started the broader debt relief efforts, saying his country was in favor of fully cancelling the $5 billion it owed by Khartoum. Sudan is emerging from decades of economic sanctions and isolation under our former president Omar al-Bashir. It had built up huge arrears on its debt, but has made rapid progress towards having much of it forgiven under the IMF and World Bank's highly indebted poor country scheme, which would reopen access to badly needed cheap international financing. Meanwhile, the International Monetary Fund is calling for a broader reform and stabilization agenda for Zimbabwe's economy to sustain an almost year-long effort by authorities to support the local currency and lower inflation. The IMF says the government should address pandemic-related health and social challenges, coordinate fiscal and foreign exchange and monetary policies, and implement structural reforms aimed at improving the business climate and curbing corruption. Zimbabwe reintroduced its own currency in 2019 after a 10-year hiatus and has been battling bouts of high inflation and shortages of everything from foreign currency to food. The local unit, which was pegged at parity to the US dollar 2 years ago, has plunged to 84.6 against the greenback, while annual inflation stands at 194%. The IMF plans to hold a virtual staff visit in the first half of June, which should be a precursor for the country's enrollment in a staff-monitored program. And over to the domestic commodities update now. Seasoning cubes are an important condiment used to enhance. In the last 12 months, the price of seasoning cubes in Nigeria has increased by about 36%. And what is driving this price increase? Let's talk to Favor Ogunraye now, one of the research analysts with Financial Derivatives Company. Great to have you, Favor.
Thank you for having me.
All right, so we've seen the April inflation moderate, and yet prices of commodities as little as seasoning cubes are skyrocketing. What is responsible for this price increase? Is that as a result of the lockdown? You know, most cooking things we use for cooking should be going down now at this point.
Just like you said, seasoning cubes are an important condiment used for cooking almost all Nigerian dishes. And then we've seen that the price of these seasoning cubes have increased by about over like 36%, and that's due to the supply gap. So what's causing the supply gap is the COVID-19 restrictions that impacted production levels, and we also saw that the increase in the cost of raw materials due to the foreign exchange impact also affected this supply of seasoning cubes. And while that was going on, demand was also relatively constant and even declined at some point because restaurants were closed and there was suspension of social gatherings. So while there was a supply shortage and fixed demand for seasoning cubes, so that's why prices of seasoning cubes went high. And now that the economy has reopened, business activities have resumed, we expect that this demand for seasoning cubes should increase. And that, coupled with the supply bottlenecks, will definitely make the price of seasoning cubes go higher in
All
near
right, so
term.
the Nigerian seasoning industry has been seen as an oligopoly, few sellers and many buyers. Who is likely to be the price leader in this market in a post-COVID environment?
Um, Seasoning market is an oligopoly, just like you said. There are few buyers, many buyers and few sellers. You also have market leaders and price leaders and price followers. You also have dominant players and marginal players. And one of the characteristics of an oligopoly is high profit margin. But then after a while, as competition intensifies, we could see that fade out. So what companies tend to do is to adopt strategies such as innovation, product innovation, and even consolidation within the space in order to drive growth and market share. So the significant factors that would definitely come into play and drive the industry would be innovation, competition, even the consumer's taste and preference, and also the level of income.
All right, before I let you go, most seasoning cubes are believed to contain monosodium glutamate. Recent research showed that it's actually bad for health. Do you think this will affect demand?
Um, apart from MSG, we also have seasoning cubes having high salt and sodium content, which have health implications. So now that Nigerians are becoming more health conscious, we see that they might most likely reduce their intake or even eradicate its use from cooking. And when that happens, we expect that will definitely impact the demand, and the demand for seasoning cubes reduce. And also
Okay.
the revenue of companies like Nestle and Co will reduce. So a way around it for these companies is to incorporate natural ingredients into the production of seasoning cubes, or even provide alternative like options for seasoning cubes, and that will by doing that, they're able to address the health implications.
Okay. All right, natural actually makes sense. All right, thank you, Favor Ogunroye. Thank you so much for your time on the program.
Thank you for having me.
All right, have a blessed day. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. From me and the team, it's bye for now.